Thanks for joining this live stream. My name is Mike. This is the Sustainable Investing Show. I'm planning to do this live stream once a week on Fridays to kind of close off the end of the week of the trading week and to see what happened with the global markets. We'll also have a look at what happened in the cryptocurrencies, Bitcoin, Ethereum, Dogecoin. And then we'll have a look more at the clean technology sector. And specifically, we'll have a look at electric vehicle and battery stocks, as well as clean energy, food, eco-friendly products, space, and just see generally what happened this week. What are some companies that stood out and some big news in the sector, as well as finishing up with my weekly investing tip, and then some Q&A if anyone has hung on to the stream and is sticking around and wants to ask questions. And happy to answer anything along the way as well about any stocks that people are watching or have questions about investing or anything like that. So yeah, let's get started. So what we saw this week, it was a pretty volatile week again for the stock market. And what happened specifically today, today's trading day, sort of sums up what's been happening. If we look at the chart in the top left, the lines represent the S&P 500, the Dow Jones, and the NASDAQ for the North American markets. And they started off kind of neutral today, around maybe 0.5%. And then they dipped down in the negative, and then finished the afternoon off in the positive around between 1 and 2%. So it looks like right now the NASDAQ is at about 0.8%, the S&P 500 at about 1.2%, and the Dow Jones Industrial Average at 1.5%. So seems like the industrial stocks are kind of beating more of the technology sector. So what happened this week? I guess let's first look at the chart for the S&P 500, and that can kind of explain a little more what happened over the course of this week, because we did have a couple dips throughout. Okay, that's not showing. Just going to go back to the markets. Yeah, so this is the S&P 500. So right now, it's going green for the day, but we did see earlier this week, where this line is at now is where it started out for the week. So it's actually S&P 500 is negative, is kind of in the red for the week. Basically, what happened was some news came out from the Treasury Secretary, Janet Yellen. She was on an interview, and basically there's this big headline that the US government could possibly run out of money by October 18th. And now, after discussions that came after this, it sounds like it's now October 19th. Sounds like when this big deadline can occur. But basically, the US has so much debt right now. I think it's about $28 trillion in debt. And basically, over the next few weeks, it's possible, and it's not sure when exactly it could happen, but it's possible the US could default on this debt they have and could essentially run out of cash. And that could cause the stock markets, the economy, everything to just tank. And it could affect things like the pandemic relief funds and healthcare and things like that. So it's a really bad situation. So it sounds like what they're asking is for the limits on the debt to be raised, I guess, so that they could borrow some more money and give time to get their debt in order. But $28 trillion is a massive amount already, and already every day they're spending $50 billion plus. So this is what caused the markets to initially fall this week, and then they sort of found a resistance, I guess, and now they're kind of going green for the day, but overall they're kind of negative for the week. And so this really, I think for investors should be a pretty big red flag for being in the market right now. And I think over the next few weeks, we'll have to pay attention to what happens with the US debt, because whatever the outcome, positive or negative, it's going to impact the stock market more broadly. And then now that we're into October, September, if we just look back at the month here on the chart, that's about here, September was generally a negative month for stocks. You did see some positive gains, but overall it was a pretty volatile but negative month for stocks. So we'll see going into October. I mean, it already sounds like it's going to be some more volatility until the US debt crisis resolves itself. But yeah, a bit of a volatile time. So a good time to keep some cash on hand, to not be fully invested in stocks right now, I think. It's good to play on the safe side, from my limited opinion. So yeah, so let's have a look at what the crypto market is doing. So what we're seeing today, Bitcoin is up 10%, and Ethereum is up 9.9%, Dogecoin's up 7.7%. So we'll just have a look at Bitcoin, because that's sort of the main cryptocurrency to watch. That's a pretty good indicator. So yeah, this is the 1 minute interval. Let's just we'll look at the 1 hour interval. But yeah, it's been for the trading week. It was kind of hovering between 44,000 per coin to as low as around 40,000. But just in the last day, it's gone up to about $48,000. So a 10% rise in a day. That's pretty significant for a global cryptocurrency. And so the news here, it sounds like Jerome Powell from the U.S. Fed basically said that the United States has no intention on banning cryptocurrency in the future. So I think there's been a lot of news about China and it kind of cracking down on cryptocurrency, and I think there's been a lot of fears for cryptocurrency investors about, is this something that's risky for my investment, or is this a good way to diversify my portfolio? And I think the US saying that they're not going to ban it, that basically sounds like they're supportive of it. I think that'll ease a lot of investors' minds, and seems like it's responding positively to that news. So now we'll have a look at the clean tech stocks. And first, I like to have a look at what the electric vehicles and the batteries businesses are doing. So positive on the day is the metals company. That's the leader right now in my sort of portfolio that I'm watching. And so we'll have a look at what's going on there. It looks like the metals company is up about 14% for the day. But if you look at what happened, I'm just going to go to the 4-hour chart. I quite like the 4-hour chart for looking at about a week or so for a stock chart. What happened was last week, I had also covered the metals company because it had fallen about 50% from the $10 range down to about $5 per share. And then this week it fell even more. I think a lot of people figured that it was going to find a resistance around $5, but this week it kind of went against that and it fell even more to about $4. It seemed like it resisted at $4.09. And then since it fell to that extreme, it's sort of bounced back a bit today and is back into the $5.20 range. So we'll see if this is going to be a trend reversal. You can see in the MACD, sorry, just going to get some water. You can see the MACD has been red, which tends to indicate there's negative momentum. So momentum in the red. So MACD has been negative since the middle of September. And since I posted the video last week about the metals company, it was someone made me aware that there was huge short interest on the metals company, particularly on September 15th, that nearly the entire stock was being shorted at the time. And maybe that's in part led to its decline. But we can see that basically since the middle of the month, it went into this really negative MACD momentum. And now for the first time in a couple weeks, we're seeing it break the green. So I'm wondering, and we're also seeing it go above the different moving average lines here. So it's possible that it could be reversing, and maybe we'll see it kind of swing in the upward for the next week. But it also sort of depends on what the broader stock market is doing, because if there's a stock crash, I mean, that will halt any momentum we tend to see in something like a tech stock. So important one to keep your eye on. I'm not seeing any news about the metals company of why it's heading up there, except it looks like the CEO bought 150,000 shares. But other than that, it looks like it's rebounding from a pretty big overselling over the past week. So some other electric vehicle stocks, Li-Cycle Holdings, ticker symbol LICY, that's up about 6%. QuantumScape Battery is up, or QBAT is up 3.6%. Giga Metals is up 2.8%. Ford Motor Company, there was some interesting news about Ford this week. Oh, and the stock market just closed. So we're just at 5 o'clock now, Atlantic time, 4 o'clock Eastern time. Ford Motor Company, let's have a look at this stock. So the big news here is that, and you can see in the chart that Ford rallied quite a bit. Just gonna see how much an increase that was. Down from $12.75 per share from last week, as high as $14.73, which is an increase in about 15%. And now it's at about up 11% from those lows last week. But the big news here with Ford was that their CEO announced that Ford's making a really big investment into EV manufacturing. And so they're basically going to build, at least one new manufacturing plant with the $11 billion and some new battery plants. So yeah, it sounds like they're really going full steam ahead with EVs. It is important to kind of keep an eye on what the legacy automakers are doing, because they will take the longest time to transition. A company like Tesla is already designed, and their whole business model is already around electric vehicles, whereas Ford is used to selling ICE vehicles. So now they have to retrofit their whole plants. They have to maybe get a whole new workforce. Whatever it is, they have to make huge investments to turn their business around. So it looks like Ford is making that $11 billion investment into EV manufacturing. So I think that is good to see. So yeah, Ford is up. Well, I guess they're down 0.07% for the day, but up for the week anyway. Tesla. There was definitely quite a bit of news about Tesla stock this past week. And what did Tesla do? Yeah, it looks like Tesla was up this week. They went as high as $7.99 per share, almost 800. Didn't quite cross the $800 mark, and that would be $800 if we just look back. That would be the first time in the 800 territory since February of this year. So almost a new high in quite some time. But some news on Tesla. Obviously, they're rolling out their full self-driving beta, and the big news this past week was that they released the button to the public that they can download the FSD beta, but you have to have a very good driving data on your Tesla to be able to download the full self-driving. So anyways, they're slowly rolling that out. There's also some rumors that Tesla's gonna report extremely strong Q3 deliveries for their vehicles. And I was just watching Rob Maurer's Tesla Daily podcast yesterday, and he has estimates of about 250,000 vehicles delivered this quarter. And if you remember Q2 of this year, they had a record deliveries of 200,000 vehicles. So this would be breaking yet another record, but by 50,000 more cars. I think the main thing that's happening is that their Shanghai Gigafactory in China is ramping up and is just pumping out Teslas like no tomorrow. And so they're really helping Tesla to get those cars produced and delivered throughout Asia, but also the European markets. I also saw in the news that Tesla's sales in Norway and Sweden were super high. So yeah, that's definitely, I think we should get those numbers. I think Tesla will report those numbers in the next couple days or so. So keep an eye for that, because if those numbers are significantly above what analysts are expecting, which I thought was only around like 120, 140,000, don't quote me, but it sounded like analysts were drastically underestimating the number of vehicles Tesla's producing this quarter. So if it's a huge beat, then watch out for Tesla stock to pop above 800. And the other thing to keep in mind for the next week is that there's a Tesla shareholders meeting coming up, and there's some anticipation that there could be some big announcements there too, because Elon Musk should be attending that meeting. So not sure what that will be, what info they'll be discussing there, but hopefully they'll report some good deliveries for their vehicles. Let's see what else is happening in the EV space. On the negative side, Lordstown Motors. I can't see what it was down. Oh, Lordstown Motors was down 18% today. That's a huge fall. And there was news on this. So Lordstown, I believe they're making an electric pickup truck. But investors didn't seem happy today that with this announcement of a Foxconn deal, it sounded like they were selling part of their business, or basically were collaborating with Foxconn to help manufacture their trucks. So whatever the case, they're down 18%, so that's a pretty big dip. E3 Metals is down 4%. Hyliion was down 4.7%. Let's check out the chart here. Hyliion, they're right at $8 per share now. This is down pretty significantly from a few months ago where they were about $12 to $13 per share. And before that, they've been as high as $55. So Hyliion has come down significantly over the past year. I'm not sure why, because they're one of the EV companies that has actually been making substantial progress with their truck. And so Hyliion's making an electric semi-truck. And it looks like for this week they're down in the negative. But I'm not really sure if there's any news about it. But this fall, they're basically testing out deploying their semi-truck with a number of stakeholders. And they're trying it out, giving Hyliion feedback on the truck, and then getting the truck ready for full production, I'm pretty sure next year. So if Hyliion can start production next year, then we'll see some revenues pretty soon. And then I think investors will probably start taking this stock a little more seriously. But right now, it's got a market cap of only about $1.4 billion. So yeah, Hyliion's definitely a stock to watch for sure. So next, let's have a look at the clean energy space. And the leader here was SunPower. So SunPower today was up 9.6%. And the big news with the company this week was that it was announced that they're set to join the S&P 400 mid-cap ETF. So it sounds like that's got investors excited. I mean, that means that a lot more institutional investors will be able to, if they buy the S&P 400, then they're going to be buying shares indirectly of SunPower. So that could add some more buying pressure to the stock, and it sounds like that's got investors reacting pretty positively to that news. But yeah, so SunPower, I'm pretty sure they're in the energy storage and solar business. I was just reading an article about solar from Clean Technica released today that basically solar deployments are at the utility level are down this year in the United States. And it sounds like that's because of there's a supply issue with solar. I'm not sure if that's related to China and trade relations there or what, but basically it's causing the price of solar panels to increase. And so solar is looking as not of an attractive option right now for deploying. However, wind power is up quite a bit from year over year. And wind accounted for, of the 7 gigawatts, I think wind accounted for half that's been deployed this year. So wind power is looking really strong in the United States. Solar power has come down a bit because of this supply shortage and increase in prices. So that's definitely something to keep an eye on. But on the positive side of solar, residential solar is actually up 100 megawatts. I think it was quarter over quarter, but I might be wrong. But up 100 megawatts. And so that's really interesting. And I really do think that residential solar, so solar going on your everyday home or building, office building or whatever, like there's a big opportunity to retrofit homes and buildings with solar, especially with these new products that, for example, Tesla's coming out with their solar roof tiles. I mean, that's making it easier and easier now and less expensive to add solar and battery storage to a building. So it's interesting that even though the broader solar is down in deployments, the residential solar market is increasing. So that's pretty exciting. Other stocks that are up, Clean Spark was up. Clean Spark was up 8% today. So that's a pretty big rise. Just Energy Group looks like it's up 4%. TPI Composites, they manufacture wind blades, I guess you'd call them. NextEra Energy looks like it was in the green today, slightly, but NextEra Energy looks like it's been falling for the past 2 or 3 weeks. It had highs of $86 per share, and then it's fallen to below $80. So yeah, interesting to see that since NextEra Energy is really the U.S. leader in renewable energy supply to the state. So they have investments in solar, wind, natural gas, all sorts of things, and I think nuclear power as well. Their market cap is 155 billion, so they're a huge utilities company. Some of the negative clean energy stocks, looks like Control Technologies was down about 9% today. I'm not seeing any news on this company, but they did have a pretty big run up over the past couple of months. You can see that just a few months ago in August, they were trading at about 70 cents per share. And then they ran up all the way to $2.50 per share. So literally like tripling in price. And now we can see they've been pulling back over the past few weeks. So I'm not sure if it's related to any news. They did just launch a new carbon credit monetization program. I did talk about this in my live stream last week, so I'm not going to cover this in full detail this time. But needless to say, this new carbon credit program is really exciting because Control Technologies is in the smart buildings space, helping buildings to save on electricity and monitor their air quality. They also have the BioCloud device that can help detect COVID-19 in the air. So there's a lot of really exciting things happening for this company, but they're down 9% today. But I think it's just a pullback from their huge run up in the last few weeks. Looking at the green product space, so looks like View company. So this company makes energy efficient windows. Looks like they were up about 8% today. So they have a market cap of about 1.3 billion. But yeah, I'm not seeing too much news on this company either that would cause an 8% run up. But although it does say here that a school has chosen them for their new facility, so looks like they have a new client anyway. So yeah, anyway, some positive news for View company. See some other stocks. Loop Industries looks like that's up 1.5%. On the negatives, Honest Company is down. So Honest Company has been sort of going up and down past little while. Like if you look at this stock chart, it's a little kind of crazy. They were as high as $25 per share when they IPO'd back in May, and then they looks like they kind of fell and hovered around $15 per share for a while, and now they've fallen and have been hovering between $9 and $10. So over the week, looks like Honest Company is down in the negative. Looks like just a few percent really, but I'm not seeing too much news on this either. I think they've just been impacted by the broader market probably. But yeah, Honest Company is definitely an interesting stock to watch. I know Jeremy from Financial Education is really bullish about this company. They have Jessica Alba, who was who's a very famous person, and she's been kind of the brainchild of this company, wanting to make baby products and beauty products cleaner, more eco-friendly. So I really like the mission of this company. I think the issue is that they've a lot of stocks that IPO, they tend to come down quite a bit after IPOing. So seems like that's what happened to Honest Company. Let's have a look at the food space. There is a couple big pieces of news in the food industry. First, we'll just see what stocks are up or down. Green Space Brands, ticker symbol JTR, they're up 7.7% today. Nutrien, that's actually a dividend company. They pay a pretty decent dividend. They're up 3%. Sorry, the chart's just loading. And yeah, Nutrient pays a 2.3% dividend. So that's a decent dividend. And if we look at the profile of this company, they're a Canada-based provider of crop inputs and services. So yeah, more in the agriculture space, but they're involved, they have a bunch of retailers, and they provide potash, nitrogen, phosphate as well. They also have services for crop protection and things like that. But a pretty interesting company, but up 3.2%. But yeah, not seeing any reasons why the stock is up, but that's a pretty good run up for the month of September, going from $75 per share to about 85. So that's probably about like a 15% increase. And so we also saw Tattooed Chef was up this week. Tattooed Chef's been very volatile for the past while. It looks like they're up 0.3% today, but for the month of September, they've really been falling pretty steadily since they reached highs of about near $25 per share. Yeah, Tattooed Chef's another great plant-based foods company, and they're really growing their sales. So yeah, definitely want to keep an eye out. It's only a $1.5 billion market cap, and if we look at their financials, I just want to see their income statement. Total revenue. So last quarter, they brought in $50 million of revenue. Previous quarter was another 50, and then they had a really great quarter, Q4 2020, where they brought in $150 million. So probably investors are wondering what's going to happen in Q3. Is it going to be again around the $50 million mark, or are they going to substantially increase it? I've heard that they're expanding to Target stores and other retailers as well, so I wouldn't be surprised if we start seeing an uptick in their revenue. So let's see what else is happening. So one stock I want to talk about today actually is Danone. So the ticker symbol is Danone, but Danone is, I'm pretty sure they're a European food company, but they're famous for their yogurts, and I believe they're in the milk space as well. But this new article came out this past week from CNN Business that that Danone is developing a plant-based milk. I'll just scroll down to where they announced that in this article, but it's pretty exciting. Danone is launching 2 new dairy-like milk alternatives in North America. So the first product is their Silk Next Milk product, and also the So Delicious Wonder Milk. And both blends are made up of oat milk, coconut oil, and soy protein. And so it looks like their starting price is going to be about $4.99 per carton, and it'll come in full fat and 2% versions, and it's going to hit US grocery stores in January. So this is pretty exciting. I mean, it's nice to hear that a brand like Danone that's been around for a long time is innovating like this and getting into new markets. And what CNN is saying down here, basically it sums it up, is that Danone wants to do what, for plant-based milk, what Impossible Foods and Beyond Meat have done for plant-based burgers, is to provide a complete replacement for milk that's plant-based, doesn't come from cows. But if you look at the stock for Danone for September, at least today they're down 0.7%. But for the whole month of September, you can see they're down from about $14.50 per share. And more broadly, it looks like they have been pretty volatile, jumping between $15 to about $13 per share. But their market cap's about $43 billion, and they're saying that they see a really big market opportunity for the dairy sector. And so could create quite a bit of upside for this company. They are also a dividend paying company. So if you're looking for a good dividend company to have, they pay a 3.5% dividend. And they're innovating as well, so they could grow revenues over time as well. So keep an eye out for Danone. They're one to watch now. in the food space. And then the last one I wanted to mention for some news was Beyond Meat. So Beyond Meat was in the news a couple of times this week, but today they were down 0.16, so basically flatlined for today. For the last few days, they've been in the negative. It looks like they're back to around $105 per share. If you notice and zoom out quite a bit for the chart, $100 per share seems to be a common resistance, bottom resistance for the company, whereas about $150 or tends to be a common upper resistance. So Beyond Meat's kind of on the bottom of their swings, but they were in the news this week, and I'll just pull up the article. Beyond Meat are getting ready to sell meatless chicken tenders at grocery stores this next month. So already Beyond Meat is selling I think they've had quite a bit of positive success with their plant-based burgers and their ground beef, but I've not seen any of their chicken products hit the shelves yet, at least where I am in Canada. But they're announcing now that they're going to start deploying nationwide, presumably across the United States, their chicken tenders for grocery stores. So that's pretty exciting, and it looks like they're going to be pre-cooked, so you can reheat them in an air fryer, put them in the oven, frying pan, or a microwave, and they'll be ready to eat. And yeah, so the question I have is how do these resemble chicken? Does it really have that chicken taste? And the texture is going to be very hard to nail for chicken. They did a pretty good job, I think, with their burger and their ground beef. I think that's pretty good. In my opinion, you'd have to try it yourself. But I've tried a lot of plant-based chicken attempts in the past, and none of them have been good. So in my opinion, just my personal preference, but I would be really interested in trying their new chicken tenders. And Beyond Meat has a huge, they have a huge market cap, or well, not huge, it's 6.6 billion, but they have a lot of investments in research and development. So I wouldn't be surprised if they did something different and with this product that other companies couldn't really do with a chicken substitute product before. So that's kind of the big news with Beyond Meat. Doesn't seem like the market reacted at all to this news that they're announcing chicken tenders. I guess investors are playing the wait and see card, but I think that's really exciting. And then on the negative for today, Very Good Food Company was down 5.6%. This company has been beaten down quite a bit over the past year. So down 5.6% today. From the month, they were as high as $3 per share. They're down to $2.36. So that's just gonna use the trend line tool. They're down about 25% in the last month. That's pretty brutal, but it gets even worse when you zoom out. Earlier this year, chart only goes back to when they're about $6 per share, but they're down below 50% of what they were less than a year ago. So not really great news for the stock, but for the company itself, I'm pretty sure they're very solid. And it sounds like, yeah, there's not too much news that's causing it to really fall that much. If we look at their financials, their revenue is growing very well. Q2 revenue came in at $2.8 million. It's not showing their market cap on here, but I'm pretty sure they're not they're below $100 million market cap. But yeah, don't quote me on that. Strange that Webull isn't showing their market cap here, but they're growing their revenues at a good rate. Like their Q2 revenues were up 150% year over year. And net income, they're still losing money on the bottom line, but they have a good balance sheet from what I understand. So yeah, I don't know why that the market is treating them not so well, but they are a small Canadian plant-based food company, so I guess they just need to keep what they're doing and show positive results on the earnings. But yeah, down almost 6% today. We'll check out pollution control. So the big mover on today for the day in this sector was Questor Technologies. So I'll just show the chart quickly. Questor Technologies, earlier today, it went as high as $1.74. I think it was up like 15 or 16% for the day. So it finished off at $1.60 per share, up about 7.4%, which is still a pretty good increase. But you can see that it's basically having a bit of a rebound after falling quite a bit over the past few months. Like you keep scrolling back and it's just falling and falling. So they went up quite a bit until January of last year, and then ever since then they're at about $3 per share. Now they're down to $1.60, and just this past week they're down about to $1.20 per share. Now the issue with Questor Technologies is that they're a Canadian company. They make incinerators for the oil and gas industry. So the problem is that anytime the oil and gas industry gets hit, it indirectly causes Questor Technologies to tank as well, because Questor Technologies depends on the oil and gas sector for their revenues. Even though Questor Technology, I consider them a clean tech stock, it's unfortunate that their stock price is so correlated with oil and gas prices. So I know Questor Technologies knows this, and they're trying to diversify their businesses, and they're trying to get into the waste heat and hot water space. So that's positive to see. We'll see if they can get that to generate some positive revenue soon. But the reason Questor Technologies stock popped the last day or so was because they announced sales of 2 large incinerator units to a couple company, to, I don't know if it's one company or two, but basically it generated $3.9 million in revenue. And the company's only a $43 million market cap. So that's a huge amount of revenue for that small of a company. So I think it got investors really excited that maybe there could be more to come. So yeah, I'm personally optimistic about Questor Technologies, but I really would like to see this company diversify from relying on oil and gas to provide their sales. That would be really great. So that was the real hot stock in the pollution control space. Bioremediation was also up a bit, dollar 1.3%. Fuel tech was up 1.1%. And so the last sector I want to have a look at is the space sector. So it looks like stocks in the space area were generally up today. Maxar Technologies was up 1.5%. The ARC Space Exploration ETF, which is a basket of a whole bunch of space stocks, looks like that was positive for the day. But I mean, if you look at the chart, September has not been a very good month for the space industry for whatever reason. But this ETF really doesn't move too much. It goes, tends to go between $19.50 to $21 per share, and not much outside of that. So that's it for the clean tech stocks. And so, yeah, I'm just looking. There's nothing posted in the chat, but we did have a few viewers come in and go. So, yeah, the next thing I'd like to do is give my investing tip for the week. And my investing tip this week is if you like to pick your own stocks and to make a portfolio, but you're really struggling lately to make a positive return on those stocks, and you want to find a way to diversify your portfolio to maybe the more broader, one of the more broader stock market indices like an S&P 500 or a Dow Jones or the NASDAQ, because those are up about 15% or so for the year. So a lot of the times a stock picker's goal for the year is to try to get their stock portfolio to beat what the broader stock market's doing. But sometimes that's difficult to do. And so if you're having that trouble, or you want to diversify your portfolio to have something that better tracks the stock market, what I would suggest, if you are one of an eco-friendly sort of sustainability, environmentally conscious person, I would recommend looking into the US Vegan Climate ETF. And I'm just going to load this on the stock chart right now. The US Vegan Climate ETF is very similar to the S&P 500 index, except that it has filtered out all the companies that are not sustainable or environmentally conscious, or basically those companies that don't have a very good ESG score. So environmental, social, and governance score. So this stock, there's I just want to see if they show, it has a dividend yield of 0.5%, and there's an expense ratio of 0.6%. So you do have to pay 0.6% to own the ETF. So there's a small cost, but basically it's tracking, the vegan ETF is tracking what the S&P 500 does. And it costs right now $39 or $39 per share to own. So it's not like one of the bigger indices that costs $400 or several $1,000s to own. So this is a great option to add to your portfolio if you want to have a little more safety or to balance the risk more, to diversify your portfolio more. I think the vegan US climate ETF is a great option for that. And so now we're into the final part of the live show, the Q&A period. It doesn't look like we have any active viewers, but we have had 8 views throughout the live stream, so it's not been no one. But yeah, if there was more people around, I would try to do a Q&A right now, but it doesn't seem like anybody's tuned in, so I'll close it off here. But yeah, summary for the week. It's been pretty volatile. Stocks finished generally positive for the day, but overall it was a bit of a negative week because of the fears in the broader markets about the US potentially defaulting on its debt that could happen later in October. So keep an eye out for that news, because it's going to either positively or negatively impact the stock market, depending if they can raise the debt ceiling, or if the US ends up defaulting on the debt. That will be really bad, and it will probably trigger a stock market crash in that case. Regardless, I'll be talking about it when